I'll be teaching a little bit about Bloomberg. I'm going to be doing a bit of a basic overview. I'll cover most of the functions as well as, or I'll cover a wider variety of functions as well as talk about a little bit about what Bloomberg is, why it was founded, and go into detail about that. So to start off, before I log into the terminal, can anyone tell me, why Bloomberg was founded? Did anyone do any research on the company? What made Michael Bloomberg, the billionaire he is today? Does anyone know that? The reason why? So Michael Bloomberg was a bond trader about 20 years ago. So he was a bond trader, and what he saw was there wasn't enough transparency in the bond market. So basically, the pricing of the bonds might show one price at one broker, but across several different brokers, they would be at several different prices. So Michael Bloomberg originally founded the Bloomberg Professional Service in order to bring transparency into the bond markets, but what Bloomberg has evolved to over the last 20 years is it's unfounded. It's a technology company. It's not really a financial company because they offer multiple avenues. So they have something called Bloomberg TV. I don't know if you've watched cable before and you flip through the Bloomberg channel, but that's one of Bloomberg's offerings. They also offer Bloomberg News, Bloomberg Legal, as well as access to the financial markets across different sectors. So I'm going to talk a little bit about, I guess, some of what Bloomberg has to offer. So when you log into the terminal, so you're gonna go get to this screen here. So basically, if you've never used Bloomberg before, sorry. If you've never used Bloomberg before, you'll have to create an account for the first time. I've already created an account, but you'd go down here to create a login. You just fill in some basic information. They'd send you a verification code. It takes like 5 minutes. It's nothing difficult. So once you have your Bloomberg account, you would log in. So I'm going to log in now. So if you've gone upstairs and seen the terminals before, some of the terminals have two screens, and then there are some terminals that have one screen. So go ahead. Yeah, so this is a paid service, but thanks to the generosity of Queens College, we can use this for free. So normally, a Bloomberg professional subscription costs around $50,000 for 2 years. So, and that's just per user. So imagine how much banks are paying to get access to Bloomberg and the financial markets. It's unbelievable. That's why Michael Bloomberg is a billionaire, is because he can charge so much for the service, and people are going to want it because it brings so much transparency. Imagine the billions of dollars that are traded on a daily basis. If you didn't have a platform that could do that in an efficient manner, banks could lose millions of dollars per day. So using the Bloomberg service allows them to trade with maximum liquidity. So that's one of the reasons why Michael Bloomberg and the Bloomberg professional service are successful. So if we were looking at an actual terminal, we would have the Bloomberg keyboard, and the Bloomberg keyboard would have a few things. So I don't know if you've seen a Bloomberg keyboard before, but it has keys at the top that are multicolored. So I'm going to talk a little bit about what those keys are. So first, you have the green keys, or the go keys. Your enter key is one of them. So basically what the go keys allow you to do is navigate the terminal. So when you're navigating the terminal, it'll allow you to move from one page to the next. There's thousands of pages, thousands of functions you can traverse in Bloomberg. I learned it personally myself by just entering in functions, just searching the Bloomberg Professional Service to find out about different features that it had. So the green keys are the go keys. The yellow keys, they're your market sectors. So they represent the four main market sectors. So there are equities, there are commodities, there are foreign exchange, and then there are the fixed income market. So we're going to focus primarily on the equities market for today. Obviously, there's a lot to learn with Bloomberg, but I want to make sure that you really get that, I guess, that overall understanding. Once you start playing with Bloomberg and you start traversing it, you're going to find like I say, like you can find a new function every day for the rest of your, Queens College career, because it's just so big. So you have that, and then you have the red keys, the escape keys. So basically, there are two escape keys. The actual escape key. So it basically brings you back to this original screen here when you click on it, and then you have the logout key. It would be on the upper right hand side, but it basically just helps you log out. And then lastly, you have some orange manipulative boxes when you go to certain pages. Those orange boxes, you can basically just change the values in them. So you can make it by a certain month, a certain year, or you can look over at a certain, over a certain period of time. So we'll go into it now. So the first thing I'd like to say, I like to do when I go on Bloomberg is look at the news, because when you look at the news, you get an overall understanding of what's going on. Like, what are the big things that are going on? So if we had a Bloomberg keyboard, there would actually be a button for news. You could literally you could click the news button and it would pop up. But since we don't have that, we're going to enter in news. So basically, this blue bar at the top, it's known as the function bar. You basically enter in functions, and it'll allow you to traverse the terminal. So when you enter in something into the function bar, you'll get multiple areas. First, you'll have functions, the functions that are related to it. Then you'll have the securities that might relate to it. So there's actually a company called that has the ticker news, and then you can search the word news, and you can see what will come up in the Bloomberg service. So if we write news and we hit enter or the go key, we can see you'll have your news page. So basically, there's it's categorized into different ways. So we have the top stories selected by Bloomberg. So Bloomberg will aggregate all the news across the world. They have their own news service, and they have news from all different outlets. They basically, anything you can see on like Fox or Washington Post or CNBC, they basically put it into their format and they upload it to the terminal. So what you'll have here are the top stories, and then you'll have featured stories. So basically, featured stories are like important things that are going on, some things that are upcoming. It could be within the financial sector, it could be healthcare, government related politics, it could be different countries. It just depends on what's going on in the world and what Bloomberg thinks is really important. And then you have commentary and analysis. So basically, those are like almost opinion pieces, I would say. They're basically pieces by certain editors that are op-eds that basically talk about what their opinion is towards certain areas. So basically, I think you can just see it. The page might have just changed on me. So basically, there's a lot to it. But if we click on a story here, so basically, when you open up a story on Bloomberg, you'll have your beginning that basically outlines what the article you're looking at is about, and then you'll have the article here. So if you just look at it, it talks about, like, this one's about Donald Trump's tax cut and how the chairman of the Federal Reserve, Janet Yellen, isn't really buying it. So you can see that Bloomberg incorporates graphs and charts into their stories, so you can basically see what's going on and what how the story lines up with what you can do within Bloomberg. So sometimes in Bloomberg you can actually click on the charts, and if you click on the charts, you can basically see, like, you can basically go to the chart they're referencing, and then you can play around with it. You can change the period this is looking at, so you can go back to like June 2007, and you can basically see what's going on. So it's just a little thing you can do with Bloomberg. So if we go back to the news function, the speed's so much easier if I had a Bloomberg keyboard, because there's like certain keys that allow me to like move it much more easier. But basically, if we go back on the right hand side, you'll see the spotlight. So basically, Bloomberg highlights a chart, a graph, or any data set that basically is something that's trending, that's something that's going on right now, something that's important, and that what Bloomberg thinks you should maybe take a look at. It's interesting to see the trends. And then we have some videos of certain things that are going on that you can look at. But if we look here, you can see like one of these articles has a B. So basically, if the article has a B, or if it has first we'll talk about a B. So if it has a B, it means it was just written by Bloomberg. So Bloomberg has a news arm, like I said, so they write their own articles. So they'll publish their own articles, whether or not they have a preference. I mean, you can see, like, Bloomberg isn't every article, so it's not like they, biasly put every of their all their out news on it. So, and then you have the V. So basically, the V is a Bloomberg opinion. So it'll just tell you if it's a Bloomberg opinion if there's a V. It says editorials and opinions. So it's just something that Bloomberg does. So maybe you don't like Bloomberg news, or maybe you do want to look at Bloomberg news. There's a way to do that. So if I had a keyboard, I'd be able to show you. Actually, let me just see. Let me see. Yeah, okay. So basically, every single day, you're going to get an email about the top news. It's called the Daybreak Alert, and basically, it highlights certain stories that you might have either selected, or if you haven't selected, certain categories you're interested in, it'll automatically select that selection for you. So if you wanted to change this Daybreak Alert, uh, basically, it's saying go to the daybreak function. So it actually tells you the function. So if we write the daybreak function and then we hit the go key, it'll allow us to customize the stories we get on a daily basis. So today it's talking about Janet Yellen and her final words because she's about to leave the chairmanship of the Federal Reserve. So basically you can select certain areas that you want to customize. So if you're interested in Americas and you're interested in commodities, finance, industrials, or different areas, you can basically tailor it your way, and then boom, it updates in real time. You can basically see what's going on in Bloomberg real time in terms of news. So if we scroll down, you can see different news. There's multiple categories. It talks about, different things that are upcoming. I always like to look at it, just as I'm starting to use the terminal to see what's going on. And if I want to tailor my research for the day towards some of the articles that are going on, because sometimes I do that because some of the articles are relevant to what I'm researching. So let's, now that you've, I guess, seen the news, let's enter in a stock. So can anyone give me any company and their ticker? Anyone? Apple. So what's Apple's ticker? So Apple's ticker is AAPL. So if we go to the function bar, we enter an AAPL. So the way we enter in a stock isn't just by entering its ticker. It's a multi-step process. So first you have to enter in the company's ticker, and then the second step would be to enter in the area or the region where that stock is located. So where's Apple's stock mainly listed in? It's in the country. So it's the United States. So basically that's abbreviated to US. And then the final step is what type of security is an Apple stock? It's an equity. So we would write the term equity. So basically these are if you're entering an equity into Bloomberg, you need to enter in these three steps: the ticker, the region, and then the term equity, because it's what you're looking at. So if we, what? Sorry. Yeah, that's weird. Okay, so basically, whenever you enter in a stock, you're going to get this homepage, more or less. This homepage tells you more about the stock, the company, and all the different things you can do with it. There are so many different functions you can play around. I mean, I'll go through a lot of them though, but I can see like some of them are in my research. So basically, the first thing you'll see when you look at the stock, you'll see the ticker, you'll see what currency it's priced in, the USD, you'll see the last price, you'll see the change on the day. This chart, this little graph here shows the 2-day chart, so it basically shows what happened yesterday and what happened today. Since it's green, the chart, and the numbers are also green, it means it was up on the day. And then you have next to it the basically the bid and the ask. So what does it mean that the bid and the ask is 1 cent? Oh, there's a 1 cent difference. What does that mean about Alpelstraw? Oh, sorry. Let me see. Okay, there we go. Okay, so I'll go through it again. So we have the Apple stock, the ticker. We have the price. We have the change on the day, so it went up by 57 cents. We have the 2-day chart. You can see yesterday it was lower than today, and it's gone up 57 cents. That's why everything is green. And then we see the bid-ask spread. So what does the bid-ask spread represent in a stock? At its simplest form. Yeah, and what does it mean when there's a 1 cent difference in a stock's price, in the bid-ask spread? What does that mean about a stock? It's very liquid, exactly. So Apple stock is very liquid compared to other stocks. And then next to that, you'll see a 46, an X, and a 1. That basically represents the amount of, that's the block of shares that are being traded at that price. So basically, 46 people are wanting to buy that at the 172.30, and there's one person that's willing to sell it at 172.31. And then you'll have the final price of the day. You'll have the volume. So Apple's stock was traded 23 million times today. You'll have your opening price O, your high H, your low is L, and then your value is basically the market cap. So what does the market cap represent in a stock? So the market cap represents all the outstanding shares times the current price. So basically, if you were to divide that, uh, if you were to divide the market cap by the current price, you would see how many shares Apple has outstanding. Uh, it's probably a very big number. So let's go into some of the functions. So the way you can enter in a function on this page is very unique. There's three ways you can move on to the next page. So the first of which is, so you see all the numbers. So the first function I want to use is the DES, or the security description function. That would basically give me an overview of the security. So there's three ways I can do that. I can either enter in the number 2 into the function bar, and I click go and it'll move me there. I can either do the DES function and it'll open it up, or I could click on that number 2. So I'll enter in DES. So DES gives you an overview of the stock. It'll tell you basically what the company does at its simplest form. It'll give you a chart of the price. It'll give you some basic financial metrics, earnings. It'll give you information about its dividends, corporate information, and then a little bit about its management team. But there are multiple things you can look at here. So remember how I said you can change your, if you see an orange box, it allows you to change it. So basically, if you enter in a different security here, it'll pull it up. So can anyone else give me a different security instead of Apple? Think unique. Citigroup. So can you tell me Citi's? It's a letter C, exactly. So how do we enter it in? Yeah. Okay. So the ticker is C, the region is, and what type of security? So yeah, so basically make sure to follow those three steps. Like when I started using the terminal, like it took me a long time to actually, learn how to do this. Like I used to just like enter in like Citigroup, and then I'd click on the function that said, C, US, and equity. But over time, as you use it, you're going to learn how to do this. Like you're just going to learn how to enter in these functions like it's second nature. So it'll take time, but like if you use it, on a weekly basis, you'll get the hang of these things. So one of the things I want to, I guess, highlight here is if we go to the industry info page. So basically, there's something here called the primary industry dashboard. So if anyone has done something called industry analysis, you can basically look at basically all the competitors within its industry. So right now, in Citigroup's industry, it's known as the banking dashboard, or the BI. This is the function you can write to enter it in. So BI Bank N. The letter N represents North America. So basically, you can see all the competitors within it. You can see year-to-date earnings. You can see news that's going on. You can see what the highlights of the industry are, and then you can see a whole bunch of information about that industry on the left-hand side. You can see the companies. You can see any government litigation, what's going on in Canada, the macro economic look, the earnings, the valuation. There's just so much to look at. Like one of the things I highlight when I talk about Bloomberg is you have to know what you're looking for. Otherwise, you're going to get lost in the sea of information in all these pages. This is just one page, and you can basically traverse an entire industry through it. So basically, if you enter in any company and you go to this Bloomberg BI function, you can basically see what's going on in different industries. So some of your professors might give you projects that relate to going through certain industries. This would be one of the top ways, if not the top way, to actually get an overview of what's going on in the banking industry. Where does it see it? So sorry about that. So Another thing I want to, I guess, look at. So basically, Bloomberg has a function called BICO, and basically that gives you an overview of what the company does in a nutshell. If you're basically looking for your 4 minute review of the company and like everything it does, and like, you know, to do a quick pitch of it, this is where you would go. So basically, the BICO function highlights is basically a research analyst's report. If you've heard of equity analysts, this is basically what they do. They literally research, and they research like one stock or an industry of stocks, and they basically provide their analysis, whether it's talking about what the company does to whether Trump, you can see Trump has a topic here because apparently he's so prevalent within Citigroup's pricing, and then you have all these different things. So interest rate boost. So there's usually three symbols here. If there's a downwards red symbol, it would mean that this analyst thinks that this area is doing bad for, or the company is doing badly in this area. The yellow means neutral, so basically means like the analyst doesn't see much change in this area. And then you have the green. So the green, you can see interest rate boost. Why do you think the interest rate boost area is green? At its simplest level, what's going on with interest rates? So yeah, basically the Federal Reserve is starting to raise interest rates because they're seeing our economy is picking up steam, and they're trying to hit their inflation targets. So they want to make sure that the economy is growing at a healthy rate. So they're going to continuously try to raise rates. It might depend, there might be certain macroeconomic events that might change that. Like one thing was when China devalued their currency, it hurt a lot of emerging markets, and then after that, like the Fed was going to raise rates, but they saw that it wouldn't be good for the world economy, because even if the US does well, we do well because we have lots of trading partners. Because lots of countries depend on our currency, and if we just recklessly don't have a proper monetary policy that's led by the Fed, we could literally destroy the world economy. So it's good to have good controls and oversights by Janet Yellen and the rest of the Federal Reserve. So basically, to go back to this talks about the company. You'll have multiple areas that you can look at. You can see like there's different analysts that look at different parts of a company, so that's really interesting. So you could even click on these and contact them if you had a question about it. Like I've done it before. It's really cool. They're helpful. They want to really helpful. They want to help you. If you have any questions. Obviously they're busy, so don't try to nag them. But basically you get a flavor for what they do and everything that's going on within the company in a nutshell way. So let's go to another function. So basically, now that we've looked at a stock, we've looked at a general stock, we've seen what it is about, and what the company does at a basic level. Let's look at the overall market. So there are a few functions that allow you to look at the overall market. So the first of which I'll look at is WEI. It's the World Equity Indexes. So basically, we have lots of indexes. What are our three main indexes that are listed here? So yeah, there are three biggest exchanges, so that's why they're listed in the top three order. So basically, you can see right now it's categorized by the Americas, so that's why the Americas are prevalent. And then you have EMEA. Can anyone tell me what EMEA is? So EMEA, you should learn this term, is Europe, Middle East, and Africa. So basically, it represents that region of the world. And then you have Asia Pacific, so that represents all of Asia. So let's say we were interested in learning more about Asia Pacific stocks. We see an orange box here that says Americas. So if we click on it, we can modify it to Asia Pacific, and it would basically show us more of the stocks within the Asia Pacific. Something that actually comes up here. Do you see this thing that comes up as red? So when Bloomberg, this thing at the bottom, actually, I didn't talk about, is called the news feed. It basically updates in real time. Bloomberg is pulling in news from thousands of sources like per second, so that's why it's going up and down very quickly. But basically, when you see a news highlight red, it represents what Bloomberg would consider a big event, whether it affects us, whether it affects another country. This one I think affected Austria, and it talked about, I think, their unemployment rate. But basically, these are the factors that make the markets move a lot. So If you see something that highlights red, click on it, see what see what the news is about, and then see, if there's an immediate reaction, because sometimes there are immediate reactions that you can see in real time that's going on within our terminal. Uh, yes. Yeah. 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 So So if we go over here, you go highlight on the D, it shows D as in delayed price. So our terminals don't have real-time data. So we're delayed by 20 minutes usually. So uh, that's one of the bad things, I guess. Like you can't see real-time stock prices through our terminal. So when I'm looking through the terminal, I might usually have Yahoo Finance or some other website open to help understand what the price is, because you don't want to look at it. I know it's kind of annoying to look at a behind price, but you're not really using Bloomberg to look at current stock prices. You're using Bloomberg to do research of stocks, the financial markets, and what's going on in the world. Let me put this to the side. Sorry, it's a bit stuffy in here. So basically, another thing we could do is also click on Asia Pacific, and then it'll bring up all the exchange. It'll bring up all the indexes within that area. Can someone tell me what the Nikkei is, or what country it represents? Japan, yeah. So the Nikkei represents Japan. So it's good to learn, what countries these indexes represent. You can see Asia had a pretty good day, more or less. Most of the indexes are up. Some of them are down. I mean, it's not always going to be the case, but you can basically see, what the change was in the last 6 months. But let's say we want to see the last 12 months. We can click here and we could go 1 year, and it'll basically update to show you what the 1 year return is. So what I encourage you to do on these pages, play around with the variables, because there's a lot to play around with. Like, you can look at these numbers move, but like if you want to see, the change in some of these over a certain period of time, or if you want to like measure it in a different currency, so you have all these different currencies. So if you wanted to measure it in like the euro, Bloomberg can update it to show you the price in euro. Make sure you press enter. Otherwise, I don't think it'll change price. So yeah, let's we can look at the Russian exchange. So uh, if we click that menu button, it'll help us revert to the original page. So Russia would be an EMEA, I believe. I don't think I see Russia here. Might have been in the Asia one. Yeah, that's weird. The Russia exchange isn't coming up for some reason. That's unfortunate. But basically, you can do research on the major world equity indexes, just to understand how the market is doing. So there's another function I like to look at that gives me an overview of not only what indexes exist in the world, but you can basically see, how industries are doing on a daily basis. So that function is called IMAP, and IMAP represents the intraday market map. So if we enter an IMAP, you'll have a pie chart come up. So this pie chart can be set by two ways. Either it can be set by region or by sector. So if we look at region, we can see how the world did today. So this pie chart, this share here represents, you can see North America, you can see the return on the day, and you can see that the North American, equity markets represent 41% of the overall world markets. So that's really something interesting to see. Like, you can see, like, we have a very big effect on the world. Like, not even China has a market as big as ours. So we can look at the different regions. You can see Asia Pacific developed. So usually Asia has two segments here. We have the developed countries like China, India, and then we have the non-developed like Bangladesh, Pakistan, some of these smaller countries, Vietnam, in the area. So you can see, like, this part here did bad. So Western Europe did bad for the day. So like, you can quickly get an analysis of like how the world did on a daily basis. So let's go back to the sector part again. So basically, it tells you how all the sectors did on a daily basis. So you can see, like, by return on the day, like how a certain sector did. So you can see financials did bad today, but industrials, did decent. So if we click on a certain sector, you can basically then go into specific categories. So what I like about this is that you can really go into the nitty gritty and find certain stocks about certain areas. So let's say we were interested in about transportation, and let's say we were interested in about airlines. So once you get to this part where it shows just one pie chart, if you click on it, oh sorry, if you click on it again, you'll basically get a list of all the stocks that are within this specific industry. So if you're trying to do industry analysis of the world of certain stocks, this is one of the ways you can do it. You can see all the companies, including actually one of my favorite ones. Bonus points to whoever gets this. What is number 9, LUV? What's the company behind that? There you go. You got it. Southwest Airlines. That's actually one of the tickers I usually ask for during my class, but you can see if you highlight above it, LUV represents Southwest Airlines. So just some interesting things. You can see what countries they're in. So you can see like these stocks are Hong Kong, HK. If you go down here, you can see these stocks, LN. LN is London. So there's just different sectors and regions represented by these stocks. So let's say you want to look for certain stocks within different criteria, but you want to look at stocks that are maybe within a certain country, have a certain market cap, or have certain financial characteristics. One of the functions we can look at is called EQS, or equity screening. So if we go to EQS, we can go to equity screening. So you can screen stocks by multiple categories, multiple sectors, multiple financials, indices. There's just so much to it. So if we say we want to look at a certain stocks from a certain exchange, let's say we want to go to Asia Pacific, we want to look at India, we want to look at stocks on the Delhi Stock Exchange. So we can basically go that deep into into a certain country. So if we click on update, so right now it basically tells us how many stocks were caught by our filter. So the first search that shows all trading stocks that are active within India, and then we have all stocks that show, I guess, the primary security of a company, because certain companies have multiple levels of stock. They could have multiple levels of preferred shares, so that's why it might show up there. And then we have basically companies that only show up on the India stock exchange. But let's say we want to look at by a certain sector. So let's say we want to look at industrials, we want to look at aerospace and defense, and we want to look at aircraft parts and manufacturing. So if we go to update, we can basically see what stocks are within that industry within India. So if we click on see results, or if you click on number 1 and you hit the go key, enter, it'll basically run that search for you, and it'll show you all the stocks that fit that category of and within that country. So basically right now it's filtered by market cap, but this is a good way to screen stocks if we're looking at a certain area of the world and we're looking at a certain industry. So if your professor tells you, to find a bunch of stocks within a certain industry, this is one of the ways you can look for it. So another big proponent that I like to push in Bloomberg is the research function. Bloomberg has a ton of research. Basically, this research tells you everything about a company and everything an analyst might do at a bank. So if we go to the RES function, basically Bloomberg gives a bunch of research on different companies. They might do the research, or certain banks might do the research. So you can see here, this is just the general highlights and initiation. So when it talks about initiations, it means like they're starting to cover a certain stock, a certain area, or a certain region of the world. So we can, in here, enter in a certain topic, keyword broker. So let's say we were interested in research about gold, a commodity. So if we write the word gold, you'll have a bunch of different articles covering this topic of gold. You can search different equity, you can search different securities, different regions, different areas, and you can basically even search by what happened in terms of coverage. Initiation, or if a bank dropped coverage, or if they revised their estimates. A lot of banks revise their estimates, or if they upgraded or downgraded a stock for the year. So if they upgrade a stock, it means they see some positive features they didn't see before, and they think the stock is going to be at a higher price at the end of the year, or over a certain period of time. Downgrade, same thing. It represents something bad must have come up, and they think they're not going to reach their certain earnings potential, or any of the factors that they reached, I guess, begun to talk about. So let's say we want to look at the current security. So right now we have Citigroup launched. So there are functions that allow you to look at a broad category, but like if you want to look at a specific, if you want to look at basically research of Citigroup, there's a function for that as well. So to look at research for the security you have loaded, you enter in the function BRC. So BRC talks about research portal single security. So it represents the security we have open. So right now you can see a bunch of headlines on Citigroup, what they do, all the different things that investors are seeing about Citigroup. So let's look at one of the articles. So we don't have access to a lot of I guess research groups. There's basically every investment bank on the street does their own form of equity research, but our terminal access only allows us to get certain ones. We're lucky, we have my company, JP Morgan. So you can basically, if you click on this little document here, you can basically open the report that it's talking about. So basically, you'll have an equity report. It'll talk about the stock, what the analyst is feeling is going on with the company, as well as any highlights, trends, anything to do with the financial analysis. So this is a way you can basically, learn more about the stock very quickly if you wanted to do research on a company, and you can take this to go even. So it's good. Like certain research on the terminal you can only do on the terminal, and then you can download these and upload them to like Dropbox or something and take them with you if you wanted to do research on a stock. So that's something that's nice to have. So yeah. So yeah, so to access it for the security we have loaded Citigroup is BRC, but the general research portal is RES. So RES allows you to, technically you can search for different things in BRC as well, I think. So basically, in BRC, you still have a box that allows you to narrow it down by certain categories. So as long as you have, like I said, as long as you have an orange box, you can do whatever you want. As long as you know what you want to do, you can search for anything you want, and it'll usually pull up, because there's always articles or information about a company, a security, a gold, any commodity, foreign exchange, countries. It's limitless. So that's one thing. So let's talk about another thing about the company. So what does the company have to file on a quarterly or a yearly basis? Earnings, but what with the SEC? Yeah, 10K and the 10Q. So the 10K is the company's yearly reports of its earnings, and then the 10Q is the quarterly report of a company's earnings. So let's say we want to look at these reports for this company. So there's a function for that. I'm going to say that a lot. So to access the filings of a company, we can go to the function CF. So basically, CF brings up all the forms that this company has uploaded with all the government agencies. So, we don't just have our 10Ks and 10Qs, we have our 8Ks, we have basically a bunch of different, things that the company has to file because they're required by law and the regulators that govern them. So let's say we're looking at the 10K and the 10Q. So basically, Bloomberg, like I said, will pull that data from the SEC's website. They'll upload it to their server, and you can basically go 1 year back. You can go 7 quarters back. You can go as far as they offer it. So it's really something really interesting. You can so if you wanted to download it, you could click this little PDF thing, and it'll or this little red thing, and it'll download the file for you. You'll basically see the 10K, but you can also click on it, and it'll go to the company's web. It'll usually download this directly from this SEC, but there you go. You have the 10Q for last quarter, I believe. And it basically just, it's good to have. But let's say we don't want to actually look through the 10K or the 10Q for the financials of a company. We can look at that through Bloomberg, because Bloomberg offers that analysis. So if we go to the function, make this smaller. If we go to the function FA represents financial analysis. So basically for financial analysis, it'll basically give you the financial highlights of a company, and then it'll talk about all their financial statements. Can someone tell me the 3 financial statements of a company that they have to file every quarter? Correct. So income statement IS, balance sheet BS, and then statement of cash flows CF. So basically, Bloomberg has the financial statements already inputted into their system. But what's really cool about Bloomberg is, let's say you want to know where Bloomberg gets this number of provision for loan losses. If you click on it, and then you click on this again. Basically, if you click on it multiple times, you'll get to this. It'll open the 10K and look at this. Once it loads, it'll actually highlight the area in which it got that information from. So that's really cool. You can basically use Bloomberg to look at financial statements and basically, verify that the numbers that Bloomberg is showing you are actually legit. So you can basically, let's go back to FA. You can basically look at the cash flow statements, but another big thing, how do we measure companies? Like, what are some financial tools we use to measure companies' health or how they're doing in terms of performance? Yes, financial ratios. So if we look here, we have something for ratios. So basically, we have a bunch of different ratios that measure a company's health, whether it's its profitability, its liquidity, its credit analysis. So if we go here, we can basically look at the liquidity ratios of the company. We can basically measure them from a certain time period. So if you look at this, you can see we have information from 2011 all the way down to 2016. So it allows you to analyze information that came from previous years. So similar to the last point, like if we click on one of these numbers, like if we click on the debt to equity for 2012, we can basically find the way Bloomberg calculates this. So basically it shows that Bloomberg calculates this looking at adding the short and the long-term debt and dividing that by the total equity. So you can see, if you click on the formula, you can see the 2 numbers that Bloomberg used in order to get this formula. So you can see they basically divided the 623 probably million number, and then they divided it by the 190 number, and then they multiplied it by 100. So this is really good. If you really want to find out about different financial statements and how Bloomberg calculates their numbers, so when you have to do your analysis, you have to show to your professor how you got these numbers. Bloomberg kind of does it for you. So that's really nice. That something that Bloomberg does for you. So let's say you want to look at a stock's chart. I haven't talked about that yet. How the price has gone up or down within any period of time. The function to look at that is GP. So if we go to GP, it'll basically bring up a price chart for the company. So you can, this one is looking at it within the last year. But basically, if you change any of these orange boxes, so let's say you want to change this December number, you want to go back 3 years, and you want to look at it from a certain date, click enter, and it'll do that for you. But let's say you want to see how the stock's price has moved relative to certain news that's gone on. So if we click on this news function right here, it should open up that's weird. Sorry. Oh, okay. No, that's not what I'm looking for. So let's say we're looking at key events that happen. So if we click on this key events, we can basically see the key events that have gone on that have shaped the stock's price. So any of these E's that you see on the screen, let me make this wider. All these E's represent when the company has to release their earnings on a quarterly basis. So you can basically see whether or not the company has gone up or down. So here you can see it went down. You can see and you can even see the ratings. So you can see the H, which represents a hold, B, which represents a buy, and remember the diamonds represents basically it's a neutral buy rating, and then if you have a diamond H, it represents a hold rating. So you can basically see how events and news have shaped the price of the stock relative to where it is today. So uh, if some of you are interested, there's something called I don't know if you know what do we call the, I guess, analyzing of charts. What's the term we use for that? Analyzing charts. Yes, it's called technical analysis. So through Bloomberg, you can actually do technical analysis. I'm sure you've heard of different, different variables that you can basically measure charts at, and different statistic key metrics. So if we go to the function TECH, that opens up the technical study browser. So basically, you can open up, you can look at certain trends or certain types of charts to measure how it's been doing over a certain period of time using, measuring the trends of the chart. So if we look here, we have something called the Bollinger Bands. So can anyone tell me what the Bollinger Bands are? Yeah, so it basically measures the volatility of a stock and how the price has moved relative to that. We have different types as well, like candle patterns. Does anyone know what a candle chart is? And okay, so let's talk about the different parts of a candle. So let me uh, move this within it. Yeah. So so what is the top of a bull? Actually, let me see if I can zoom in here. No. Oops. Basically, the candle, I guess the candle chart represents the company's. It basically just represents the open, the close, the high, and the low of a company's stock during an intraday trading. It's represented within the different candles that would show up on that chart. If you're interested in doing technical analysis, going to the technical function and then just looking at the individual charts, you can definitely play around with it, add different metrics. You can even draw on some of these charts using the annotate feature. So here you'd have a bar, like you can draw some things like trend channels, like if you started here and then, you see like there's been a trend here, and then, you can see like it's basically followed this channel. You can basically draw on these charts, and play around with them, see, are there certain trends, certain things that are going on that would make you maybe want to buy or short that stock. So it's just it's a few good things to look at. So let's let's go into some other functions. So remember we were talking about how the company has to file quarterly earnings. So basically, when the company files quarterly earnings to talk about their health, there's certain functions that allow us to view how those metrics have shaped up within the last few quarters, and basically how analysts project into the future how they're going to be. So one of the functions we can look at is the ERN function, which talks about the earning history. So if we look at the earnings history, we can see the last few quarters of its earnings. We can look at the reported versus the comp. So basically, the comp is what it's measured against from comparable companies. How it should have done. But one of the biggest things we look at is how the estimate right here is different from the reported. So what happens when the estimate is less than what the company reports? So basically, the company reported higher than what the estimate was. What happens to a stock usually? So it should go up, exactly. So when a company has positive earnings, it's a good thing for the shareholders because it means the company is making more money. It's technically worth more. So that's why when you have these earnings that come out, the stock starts to jump or might fall, depending on certain things. But looking at the earnings per share, EPS, is one of the ways to do that. Obviously, there's another thing called guidance. So right here we have something called guidance. Basically, if a company has positive earnings, it's talking about how the future earnings down the line are going to be versus the earnings today. So basically, if a company has positive earnings, is one of the ways to do that. Obviously, there's another thing called guidance. So right here we have something called guidance. Basically, if a company indicates positive or negative guidance, it's talking about how the future earnings down the line are going to be versus the earnings today. So basically, if a company releases positive guidance and positive earnings, it means the stock will really surge. But if a stock reports positive earnings and negative guidance, that's a little bit of a dark area, because you don't know if the stock is going to go up or if it's going to go down, because technically the stock price is supposed to be the discounted value of its cash flows, something you've learned in your finance classes. But in this case, it might not always measure up. So like even here, even though the earnings beat the expectations, we can see the price change that happened on the following day was a negative price change. So don't always I mean, if you're trading stocks for earnings, make sure you do your proper analysis, and don't try to play the earnings game. It might look cool, it might be fun. I kind of did it. But you definitely have to do your research and figure out these things, because smart investor is always is the best investor, as I say. So it's just something you want to look at. So remember how I said analysts can talk about their research. Oh, you have a question? Okay, so I talked about the analysts, they make their research reports. So let's say we want to look at all the analysts that have made research reports for this company. So if there's a function called ANR, which talks about analyst recommendations, so we can basically see a chart of all the analysts and their recommendations for this stock over a certain period of time. So you can see right now, there's 60% of analysts are saying this that are green, which means it's positive. They think, stock price will probably go out. Yellow represents neutral, and then the red represents a sell. So you can see right now, there's positive expectations of the stock. You can even measure the stock over the stock's price over a period of time based on the analyst recommendation. So you can see like there's been a lot of buys in the last 2 years. You can see, and it's basically followed that trend, that it's positive trending. So and now that we've reached this price, analysts aren't sure if that's going to continue to hold. So it's definitely a good way to see how the market expects stocks to move, because when you have an earnings event, basically stocks aren't going to move because your mom and pop investors put money into them. It's going to move because the banks are going to, or the banks or asset management companies are going to move a lot of money, buy or sell that stock, depending on what they think the value is. So when you see these big drops or big increases, it's because the banks are either starting to buy a lot or sell a lot, or depending on what's going on with this company. So it's just a good way. You can look at the analysts, you can see the firm, you can see the 1 year return of how they've done, you can see what their target price is. So a lot of these analysts are saying that Citigroup is supposed to be worth more than the $75 it's worth today. So is that a sign of good things to come? Only time will tell, because these analyst ratings can be changed on a daily basis. Market events happen on a daily basis. Like, these things are changed very quickly. So another cool function. So if we go to HDS, remember how I said that how different banks and asset management companies own a lot of these shares. So if you can look, you can see BlackRock, Vanguard Group, State Street. These are all asset management companies. Basically, what asset management companies are at their simplest form is, let's say you work for a company. We have these retirement vehicles called 401ks. You might have your IRAs. You might even have your own investing account. Basically, you might invest with one of these different companies, indirectly or directly, by buying an ETF, or investing with Vanguard itself. Can someone tell me what an ETF is? Yeah. So, but what does the word ETF stand for? Exactly. So it's an exchange traded fund, and as described, it represents basically it could represent a bunch of securities. It could represent a bunch of indexes. It can represent countries, markets, commodities. Basically, ETFs are, you can buy into anything, as was said. So if you buy into like certain ETFs like SPY, SPY is basically the ETF that tracks the S&P 500. So this is the SPY is offered by Spider, and Spider is part of the Vanguard, or is part of BlackRock. So that's just one of the interesting things. Even though you might see SPY as one of the most traded stocks, it's because it's made a name for itself. But with ETFs, you're always charged a fee. So it's just a few. These are just a few things to know. So we can see right now BlackRock has over 188 million shares. Vanguard has over 184 million shares. So basically, these companies represent the biggest holders. So when you buy index funds or ETFs, you're basically buying into indirectly, you're buying into a company. So if you buy into the S&P SPY, you're buying into the entire S&P 500 index. You're buying into 500 different companies. Basically, how asset management companies get a lot of stocks are you buy their indexes, and then the funds that they get from you buying their indexes, they reinvest into buying more stock, and they're able to get these huge positions. And you can see this position represents 7% of all outstanding shares, and you can see that as of September 30th, BlackRock sold 18 million shares, because obviously these asset management companies are always buying and selling. So these are the biggest holders. So if you had to see, what's going on with these positions, you can see right now, you see a lot of selling by the top holders, and you see some buying down here. But what does that mean? So these are the things you have to do analysis on, and figure out why this is the case. There are different tabs here. You can sort by ownership summary. You can look at how many shares are being held, how many are held by different institutions or by buyers and sellers. So you can basically see how many geographically, you can see like 76% of city shares are held within the US. Yeah. Yeah, so we're looking at the holders of the Citigroup stock. What? Yes, that's insider holdings. Sorry if I didn't talk about that. So HDS represents the insider holdings function, or the security ownership. Basically talks about who owns certain companies. So let's say we want to see the supply chain of a certain company. So basically, like if we go to a company like let's go back to Apple. So if we go to AAPL US and then equity. This is really being annoying today. So if we click here. So basically, if we go to the function SPCL, that represents the company's supply chain analysis. So if this loads in a proper fashion. Okay, perfect. So basically, right now you can see Apple's supply chain. So all the suppliers are basically companies that sell to Apple. So what are companies that you think sell to Apple? Like, what does Apple make? Okay, they make phones. So what do they need to make phones? They need screens. They need chips. They need all these different, like if you knew how many parts went into an Apple iPhone, you'd probably drop your jaw, because it's probably hundreds. Because like the process to make these phones, from start to beginning, it's like if you ever got to see the process, you probably have your mind would be blown just by the sheer analysis of like the scale and the size. I mean, everyone wants the new iPhone X. What's happening? Apple's, apparently can't meet the supply and demand, or the demand for it. So, they're going to need more supply of all the materials. So the supply represents basically everyone who supplies Apple. And then we have the customers. So basically the customers are everyone that Apple sells to. So who does Apple sell the phones to, company-wise? Exactly. All these different telecommunications company, or these cell phone companies. AT&T, you can see Deutsche Telekom, which is T-Mobile. Verizon, you can see Best Buy. Best Buy technically sells through different providers. So basically, all these electronic and cell phone companies are their biggest sellers, because iPhone is Apple's biggest product. So that's why you basically can see why it's the largest part. But basically, if we look down here now, we see the competitors. So Apple has competitors. So you can see HTC, BlackBerry, and Samsung. What do they also sell? Cell phones, exactly. So that's why they're, I guess, what Bloomberg would deem their biggest competitors in terms of that. So basically, you can click through the supply chain and see basically see all the companies that these other companies interact with. So you can see that this company called Tech Data Corp interacts with 114 suppliers, but they don't really. You can see they don't have any customers. Yeah, that's a good question. Ah, so the revenue basic. I think it talks about. It's a good question. So it basically talks about, I guess, Apple's revenue, and I think it might talk about how, I guess, Apple I guess what percentage of revenue is derived from these companies. Yeah, yeah. Supplier gets from the central company. So basically, I'm going to take a stab and say like this is how much the company spends. Uh, spends from their perspective buying the products of this company. So basically, someone like Apple spends like 2.24% of all its revenues on the products from Tech Data Corp. Uh, what that is, what they're buying, I'm not exactly sure. Like you'd have to do the research. Like I can only tell you so much. I can only tell you how to navigate these functions and like how to use them. But I can't tell you what exactly each of these things might mean, or like how different suppliers have different impacts. It's really up to you to really on your own time go back, look at these functions, and then do your own analysis and research. So another function I want to look at is something called CL. So it's called CL. Let me actually. CL represents company litigation. So basically, companies can get sued for a variety of reasons. So I like to look at sometimes why are companies being sued. So why is Apple being sued as of 2017? Most of their cases involve patents. So what is a patent? Exactly, it represents Apple's right to basically own uh, a certain idea, a certain process, a certain function. There can be patents on everything. There can basically, like Siri, for example. Siri represents Apple has a patent for Siri, and basically how it connects with you, and how it in its own way is able to, like, if you say something, talk back to you. So it's basically Apple's software and Apple's technology behind the Siri function. So Apple has a variety of patents, not just on its technology, but also on its hardware, on its design specs, all these different things. So Apple wants to make sure that, it can protect it, or in other cases, not get sued. So if we click on patents, you can basically see all the different court cases representing Apple. Uh, and what's going on. If you're interested in doing some legal research, remember I said Bloomberg Legal is one of Apple, or one of Bloomberg's different avenues you can look at. So this is just one of another good function to look at. So let's go into different types of securities. So I talked about equities. So let's say we want to look at the fixed income market. So can anyone tell me the different areas within the fixed income market? So bonds. So bonds could be, we have government bonds, we can have corporate bonds, we can have different types of securities. So one of the areas is the government bond market. So Bloomberg basically has yellow function keys, like I mentioned earlier, for each of these different markets. So they have keys for the government fixed income securities. They have a button for municipal bonds. Does anyone know what a municipal bond is? Yeah, it's basically a state or local bond. So like New York, or if we want to go specific, like New York City, or if we even wanted to go more specific than that, we could say like the town of Richmond Hill or something like that, into that effect. So basically, municipal bonds exist for all these different areas. And then we have something called money market securities. So what are money market securities? Not exactly. Uh, you have to understand, but what is the money market? Yeah, so the money market is government securities that have a maturity date of less than a year. So they could represent bills, They can represent notes, basically securities that have a very short expiration time. So let's talk about loading a security that a fixed income security for a company. So can anyone give me a different company this time? Something unique. Okay, so let's see if Goldman Sachs. So GS. So if we enter in GS, we enter in US. Okay, so in the securities tab this time, uh, hmm, let me just see. Yeah, okay. So basically, let me just see. Sorry. Okay, yeah, this works perfectly. Okay. So basically, to enter in, I guess a corporate bond or any corporate security. So we enter in the name of the company, and this time, instead of entering in the location of it, we enter in the yield or the basically the price of that fixed income security. Because what a fixed income security represents is basically saying a company, Goldman Sachs, can offer me 8%, 3% within a certain period of time. They might have a bond that lasts 30 years, or they might have a note that lasts 10 years, or even a shorter term security that lasts, a couple of months. So if we enter in Goldman Sachs, let's say we're looking for I guess a security that only lasts, that has a 3% yield. We enter that in, and then next we would have to enter in a date. So you obviously have to know a little bit about the bond. You can't just say, you're looking for Goldman Sachs, you're looking for a 3% yield. 20 years from now, it's like you have to kind of do your research. But like one of the things is, if you don't know exactly what you're looking for, we can scroll down here and we can look at different corporate yields. So basically, we can see there's a bond that has a maturity date of April 26, 2020. And it's a corporate. It's basically a fixed income security or a bond. So this is the way how to enter it in. You enter in the security ticker, you enter in the yield, you enter in the date to maturity, and then you enter in the word corpse. So let's write out this function. So 04-26 2020 2022, and then we enter in the word corp. So if we enter this in, no, that's, sorry, this is acting strange today. So if we click on this, you'll basically have the same screen, when you enter in an equity security, except this time it's going to be for a bond or a fixed income security. You'll have all the functions relating to it. You might not have as many functions this time, but as long as you know how to play around with it, it's basically provides you with almost the same information. So the main function, I talked about earlier when we went to Apple stock, was the DES function, the description function. So every single security will have a DES function. It's just, it'll be different because it's a different type of security. So right here we have an analysis of what this bond represents. We can see the company, we can see what type of debt it is, we can see all these different characteristics. So I'm going to talk a little bit about it. So basically an unsecured bond or secured versus an unsecured bond means if the company goes bankrupt, which bonds will have more priority versus the other. So this one is a senior unsecured bond. So I guess it means of all the unsecured bonds that Goldman Sachs offers, like this one would be rank above it. So if a company actually went bankrupt, let's talk a little bit about that. What is the rank and order, I guess, of all the security or all the debts that the company would have to pay off? Exactly. So we would have our bondholders usually get paid first, depending on seniority, and then you'd have the shorter term equities. But equities are broken up into two areas. You have the preferred shareholders, so the preferred shareholders would come first, and then you'd have the junior equity holders, are basically your common stock. Usually, if a company would go bankrupt, good luck getting your good luck getting your money back if you have a common stock. So this is one of the ways you can look at it. The coupon rate, it's basically the interest rate on the bond. You can see the frequency. So basically, depending on what type of security it is, it'll say. So this one it pays on a yearly basis, basically. So it talks about 30 by 360. So basically, it counts. Uh, it'll basically pay out every 30 days, but it over a 360-day period, and we have the maturity date that represents when the bond is basically going to be fully due. So whenever anyone invests in a bond, you have to put in your principal payment. So your principal payment here would represent, it would show like issue price. It was issued at $99.68 per bond. So basically, that was the issue price, and we can see, how much is going. Basically, when the bond hits that 2022 date, you're going to get your final interest payment plus the original money you invested in. So that's how a fixed income security gives you money. It gives you interest payments over a fixed period of time for a fixed amount. So that's a little bit about a bond. You can see how much is outstanding, 3.25 billion. You can see the bond ratings. So the three credit rating agencies, Moody's, Standard & Poor's, and Fitch, basically give a bond a rating. They measure the company's health in a sense. So they're going to say, what is the ability of the company to pay back the bond over this period of time. So they'll talk about, they'll look at the company's financials, they'll look at the health, they'll look at the news. They'll basically, something similar to what the analysts on Wall Street do, like I talked about earlier. They'll do their own research and then come up with a bond rating. So if a bond has a lower rating, it could go all the way down to something we call a junk bond. That's when the bond has like a C, a D, or an F rating, and that represents bad companies that might they're likely to default on their bond, but like Goldman Sachs here, they have an A3, a BB plus, an A. Those are really high bond ratings on the scale of all bond ratings. So that means they're a credit-worthy company. So when companies are more credit-worthy, they'll be able to borrow at lower rates than junk bonds, which usually have higher rates. But another variable that affects the coupon rate of a bond is the duration, or how long it's issued. So basically, bonds that are issued for longer have higher interest rates because you're basically investing your money into a company for a long period of time. So you're basically looking at the cash flows, maybe not 10 years from now, but 30 years from now. So you basically want to be properly compensated for that. So that's why bonds usually have higher rates for longer durations. So remember how I said Bloomberg was created to bring transparency to the bond markets. So let's look at the main function Bloomberg uses to evaluate a bond. It's called BVAL. So Bloomberg valuation. So basically, Bloomberg valuation has their own metrics to evaluate a bond, and they basically have a scale of 0 to 10. So we can see this bond right here has a BVAL score of 10. So it means it's a very good bond. It's something that Bloomberg thinks, is something that's trustworthy. It's going to make this company is going to make its payments over all the years. You can see basically, worst case scenario of certain metrics. You can see information about the company, and similar to what you saw in the description function, but you can also look at the direct observations, just things that Bloomberg has noticed in terms of the bond and its history over a certain period of time. So these are just some things, that Bloomberg has to offer to see, whether or not the bond is. So one of the interesting things here is the bond is callable. What does a callable bond represent? So a callable option, I guess we can say. So a callable bond basically gives the option to the company to basically say we don't want to offer the bond or we don't want to make interest payments on the bond anymore. why would a company, stop making payments on a bond or exercise that callable option? Yeah, but why would a company want to do that? Think about interest rates. So basically, this ties into interest rates. So if interest rates start to decline at any time, let's say today they're like 10 years ago they were borrowing at 3%, but yesterday the rates dropped to 2%. So basically, Goldman Sachs would say, oh, we can get a bond that we can only pay 2% interest versus 3% interest. So these are the different things that companies will do, like 1% interest difference in this bond can save the company tens of and hundreds of thousands of dollars over a 30 period time. So that's why companies will exercise that callable bond if they have the option to. But I guess the opposite of a callable bond is a non-callable bond. So basically, non-callable bonds tend to cost more. So usually you'll have to the company will be willing to pay a lower rate for that. So, but for a callable bond, they'll usually offer a higher rate because they don't, at any time they can cancel it. But for a non-callable bond, they don't have that option, so it could be riskier for them. So it's just something that can happen. So I talked about U.S. Treasury or U.S. Treasuries. So we had the bonds, the bills, and the notes. So if we go to a function called fx1, it basically allows us to look at oh wait, px1. Sorry. So if we go to the function called px1, it allows us to look at all these different things. We can look at the bills, the notes, the bonds, the tips, all these different securities that are offered by the U.S. Treasury, because how our government runs is, we can't just print our own money rapidly. We have to borrow some of it. So that's why the Treasury offers all these different these fixed income securities or these government bonds, and they allow investors such as you and me or other countries such as China and Japan to buy it. So China and Japan are usually, they own about $1 trillion plus of our federal debt each. So that's why at our 20 billion federal, I guess the federal debt they talk about, it's not all because we're spending too much money or we're at a budget deficit. It's more that we're borrowing a lot of money, or we're spending additional money on wars or for healthcare or for other things that might raise the debt. So if we look here, so we can see for the United States we have the bills that expire within less than a year. So you can see the expiries here, all the dates are within next year. So the last one expires within 1 year, and then you have the notes which last between 1 to 10 years, and then you have the bonds which last 10 to 30 years. So you can see like here, this one, all these are 2-year securities, 3-year securities, 5 years, 10 years, and then the bonds are all about 30 years. So and then you have your tips. Can anyone tell me what a tips is? So a TIPS is a Treasury inflated protected security. So basically, you can buy a security that will pay you an interest rate plus the current rate of inflation. Isn't that cool? So basically, you can always beat inflation in a sense, because you're investing into something that basically pays you an interest rate plus, whatever the inflation rate of the country that offers that fixed income security. So right now, the Fed is trying to target a 2%, I guess a 2% inflation rate. So, it would be 2% plus. This one is only 1/8 of a percent, or like 0.1 0.125 base, or yeah, 12.5 basis points. So that's not really paying much, but it's basically you're willing to give money to the Fed in order to protect yourself from inflation. So it's just different things you can look at, but you can also look at different countries. So if we look at the G7 countries, basically the global or the G7 just represent, I guess, the biggest seven countries that offer fixed income securities. So we have Canada. So you can basically, each country offers their own government securities. So you can look at all these different countries, all these different areas, and you can basically see, what's going on in terms of the price of these bonds, how much are they buying or selling for, and then, how much is the change of their yields on a daily basis. What was the last time the price was calculated? But if you don't know what these things mean, the F1 key is also known as the help key. You can click on that. Let's see if this works. Okay, so if you click the F1 key on any page, it'll tell you everything you need to know about that page, and then just some things plus. So you can see this talks about fixed income trading. It tells you, what the different securities are, all the different areas within fixed income trading. You can basically, get a feel for what the page has to offer. So if you ever need help on a page, always click the F1 button, because it'll open up something like this to tell you, what is this page about, what can you do with it, and then, what can you look for using it. So it's just some things, you can look at. But let's say you really need help, and you might have to ask someone a question. Bloomberg, if you clicked F1 twice, you can contact the Bloomberg help desk. So basically, if we paid for the service like a bank, we would be able to get access to their live chat feature, which operates 24/7, literally. So any time of day you could get help from a Bloomberg associate. But if you contact the help desk through this, you can send them a message about a certain page. I was looking at this. Can you tell me more about how to do X, Y, Z? So basically, you can do that. You can even send it to your email address. So one of the cool things with Bloomberg is technically you get an email address with Bloomberg. So whatever your sign-in username is at bloomberg.net, you can technically send yourself emails. So remember how I showed you this message feature? There's a button for that on the keyboard. If you were using the terminals upstairs, sorry, this isn't loading. So basically, you can send yourself emails, or you can send emails using Bloomberg. So, it's a cool thing. You have an additional email box that you can use. So if we go to FICM, another security, this shows the fixed income credit monitor. So basically, you can see how fixed income securities within a certain industry are doing. So you can see, what are the change in terms of basis points, or the percentage of the yields that are being offered by these securities. So you can see, how they've changed on a daily basis, and then you can even, I think, go into them. And you can basically see all the companies that sell fixed income securities, and do analysis there. You can see how their fixed income security is doing versus their equity security. So you can compare Caterpillar, CAT. You can see how is their fixed income security doing versus their equity security, because maybe you might want to invest in one versus the other. Maybe one offers a better rate than the other. Maybe Caterpillar is not going to do so well in terms of growth, so their company stock isn't going to grow, but their bonds, they're always going to be paying a fixed rate. So, it might be attractive to invest in one security versus the other. So with rising rates, let's actually talk about that a little bit. What happens when we have rising rates? What looks more interesting from an investor's perspective? Yeah, so not just bonds, but fixed income securities. Exactly. So as we see a rise in rates, money will shift from the equity capital markets, or ECM, to the debt capital markets, DCM. And basically what you're going to, I guess, start seeing as interest rates start to rise, companies that have stocks that aren't tied to the interest rate, like banks, will start to decrease, because people will see that fixed income securities are more attractive. They're the place to be. Like, they don't have to take the risk. It's a fixed payment. It'll come every single year, month, or however it is. So it's just something to understand. If you understand how the economy works, like, you can really understand why certain things in Bloomberg happen, or why certain securities are moving the way they do in Bloomberg. So if you actually see this little cell phone bar chart, I guess you can say, you can basically see how much news has the company seen within the day. So you can see, like, Caterpillar has seen a lot, but like Boeing hasn't seen that much. So if we click on this, it basically opens up all the news for Caterpillar. So these are just different things you can play around with. Like you can, you can see like how maybe all this news about Caterpillar has affected its stock price, or how it might have affected its security over a certain period of time. So, for some of these securities, look at that, see why that's the case. So let's talk a little bit about currencies. So, what is the currency market called? Forex. And what is Forex called? Foreign exchange. So Forex, the foreign exchange market, talks about basically the buying and selling of currencies on a daily basis. The Forex market represents it's the world's biggest market, without a doubt. Like, it's bigger than all the other markets combined in terms of the amount of volume that's traded on a daily basis. People are sending money left and right on a daily basis. Companies, individuals, like if you're sending money overseas to another country, these are all the, like, Forex is basically the financial tool you would use to transfer that money, or that value of money. So I'll go over a few functions with Forex, and basically how to enter in foreign exchange securities into Bloomberg. So foreign exchange securities into Bloomberg, it's a little bit difficult. You have to understand how we compare foreign exchange currencies. So basically, I said, you can't just look at the USD. The USD is the USD. One USD represents one USD. You can't compare it against itself. So the way we look at currencies' values are how they stack against each other. So what is the dollar's ticker? What do we call the dollar? USD. Okay, and let's say, can anyone give me another currency ticker? EUR, so euro. Okay, so we're going to compare the dollar against the euro. So let's say we want to compare how many euros we can buy with $1 US. So the way we do that, there's two things. First, we enter in the base, or the home currency, which is USD, and then we enter in the currency we're trying to look for. So basically, we're trying to see how much one USD can buy in this foreign exchange, or in the secondary currency. So the main currency, USD, can buy how much EUR. And then there's usually a button that's called currency. Otherwise, you can just enter in the currency function here. And basically, we can see $1 US today can buy 0.8445 euros. So basically, you can see that you can see how much it's changed. You can see also all the different variables I told you about. How much the high, the low, the 2-day chart. What is the spread? And like in this market, you will have the tightest spreads. Like they will be within. You can see like this is within point. Like this is 1 basis point. That's less. So to talk about basis points, basically a penny represents 100 basis points. So 1 basis point is 1/100th of a penny. Yeah, a very small fraction. So let's say we want to look at now how many dollars we can buy with €1. So we would flip it. So this time we would do EUR USD, and then we would enter in the currency. So with this, now we can see you can buy 1.184 US dollars for €1. So remember, how you write in the foreign exchange currency into Bloomberg. The main currency basically is your base. What you're comparing the foreign currency or the secondary currency against. So basically, €1 can buy 1.184 dollars. So you can see the previous one was red and this one is green, because obviously one has to go up and the other has to go down by logic. So basically, you can see that if it's green, it means the currency has appreciated, and if it's red, it means the currency has depreciated. If a currency has appreciated, it means you can basically buy more of that currency with your base currency. So today, you can basically buy 0.0077 or I think 7.7 basis points more of US dollars than you can of vice versa. So basically, you can see actually it moved. Why is the market still open? The joke is that it's a 24/7 market; it never closes. Unlike equities, like that are traded on the New York Stock Exchange from 9:30 to 4 p.m. This is a 24/7 market. There are three major hubs that foreign exchange is traded through. It's basically when one market closes, another picks up. Does anyone know what those three hubs might be? I'll give you a hint. We live in the we live in the first one. So New York is the first central hub where forex is traded. London is the second one, and and Tokyo is the third one. Correct. So basically, these are the three main hubs where forex is traded. Why that's the case? I'm guessing those companies got the jump, or those countries got the jump on the others, and they basically said we're going to be the hub of it. So it's just a good thing to look at in terms of that. So if we look at the FX function, yeah, this is what I brought up earlier. Basically, we can see how certain currencies are doing versus our spot currency. So basically, our base currency, remember, like I said, is the USD. So we're comparing USD versus USD. Like I said, $1 to $1 is still $1. Okay. And then we're comparing it against the euro. So we can see that the base currency, remember, we're trying to see how much of another currency can we buy. No, so how, oh, so basically, yeah, how many dollars can we buy with this foreign currency? So how many dollars can we buy with the euro? We can buy 1.18, as we saw before. How many Japanese yen can we buy? Or how much Japanese yen does it, how much Japanese yen can be bought with, or no, how much does it, yeah, how much Japanese yen can we buy with $1? And all these different currencies. So we can, see all the G10. We can even sort it by different areas, all of Europe. We can basically see, how all the foreign currencies are doing. Almost each country has their own foreign currency, so they have their own monetary policy. But some countries, they're small. They don't have their own, they don't have the ability to have their own currency. So let me talk about a little example. So remember, so which country had that thing called the $100 trillion note? Zimbabwe, exactly. You know why Zimbabwe ended up having a $100 trillion note? Can anyone tell me the story behind that? So they basically had horrible monetary policy. Their monetary policy was like printing, 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 printing. And basically they just kept printing money without having an economy to back it. And when you keep printing money and you have nothing to back your currency, basically you don't have the resources to to make sure your economy can hold all that, can hold the value of the currency. Your currency is going to start to fall, because when you print more, basically, you have more currency than you had the previous day, and basically the currency that you printed yesterday is added to the value of today's currency. And you basically have a bigger pool of currency that has the same value as yesterday. And the bigger and bigger and bigger you go, and the value of the currency doesn't, and the value of your economy holds still. You're basically gonna end up having something called hyperinflation, is what it was called. They basically kept printing money without having the economy to really back it up. So that's just one thing. So remember, I talked about each function can be viewed through the DES function. So this talks about basically the spot exchange rate. So it talks about what currencies being traded. So if you don't know, it'll actually say like how many dollars can you buy for €1. So it'll say €1 in USD, and you can even see a chart within the last 2 days. You can even see what type of currency it is. So what is a floating currency? Can anyone tell me? No. Sorry. So a floating currency means that the central bank, or in our case the Fed, will allow it to move up and down without interference. So our country and many other free world countries that, I'm sorry, can you get water? I'm so sorry. Sorry. So This basically represents countries uh, that more or less believe in the value of their currency. So dollars and other trusted currencies. Yeah. So sorry. So basically, floating currencies will trade freely on the market without interference from the central bank. But countries like Venezuela, what's going on with Venezuela? Exactly. So the currency is it's a fixed currency. It's pegged. It's saying for their currency is called the bolivar. So let's say for the base unit of 100 bolivars, you can only buy $1. But let's say down the street, like people, like if the currency is fixed, and let's say the actual market that exists out Venezuela is saying, oh no, you can't buy a $1 with 100 bolivars. It's actually worth 100, it's worth 10,000 bolivars for $1. So basically, if you have that, you have something called the black market, where the actual rate is basically fixed at a certain rate, but the black market, basically, the people within that country, say no, it's not worth it. You can't actually buy, $1 with 100 bolivars. You need 10,000. So if you have a country that has a fixed rate and basically has weak capital controls, that means like you're allowed to trade money in and out of the country. It'll basically say that that currency will end up having something called the black market, where where the currency is technically worth less than what its official rate is. So let's see if we can actually pull up the Venezuelan bolivar through this. I haven't actually tested it out. Thank you, appreciate it. Uh, Okay, so we can see, like, if you actually search the tickers through Bloomberg, you can actually if you search it, like if you don't know something, you can search it through Bloomberg. Like you can write the word Venezuelan, and then you can search Venezuela or the Venezuelan currency, or you can even search if you click here, you can search everything to do with the word Venezuelan. So let's actually compare the Venezuelan bolivar to the USD. Is that VEB? So if we look at the Venezuelan bolivar versus the dollar, we click on the currency here. So we can basically see, like there's been no change because one currency is fixed versus the other. So basically, it means like that country will not allow the value of that money to trade freely on the world market. So if we go to the description function DES, we can see that Bloomberg lists this as a conventional. I'm guessing it's a conventional peg. Let me just see. Yeah, so it's a conventional peg. So basically, if a country has a pegged or a fixed rate, it means that only that currency is not allowed to be, or the central bank will not allow it to basically trade at a value of higher or lower to whatever it's pegged against. Some countries have pegs for good reasons. Like if you have there's something called the trifecta. It's having, I can't exactly remember it, but it's basically let me see if I can actually find it through here. No. But basically, there are three variables that affect that can determine whether or not a country can have a free a currency that is free of any influence. It talks about whether it's pegged or not, or whether it's allowed to be traded on the foreign exchange, or if they have proper capital controls. And then there's a third variable. Professor Marshall, do you know? No. So basically, there's a lot to learn. Like even like I might know a lot, but it's like even these small things I might forget. So let's go to a function called FXC. So it's called the foreign exchange matrix, or the currency rates matrix. So remember I said you compare currencies against each other. What if you wanted to compare several currencies against each other? This is the function to do it. So you can see right now our basket of currencies. That's basically the pool of currencies we're comparing it against. This is, I guess, this is the Asian market, or actually no, it's the major markets. So basically, we can compare our base currency, which is the USD, I believe, to other countries. So if we wanted to look at maybe Latin America, we can compare the USD to all these other countries. BGNL, I think, represents it represents all the different exchanges. You can see like Bloomberg gets its data from New York, London, and Tokyo. So those were the three major areas I was talking about earlier. But basically, what this FX cross represents, up here you have the base currency. So, or how many euros here can you buy with $1? So with $1 you can buy 0.884, like we described earlier. Vice versa. How many Mexican pesos, or how many I guess how many dollars, how many Mexican pesos can you buy with $1? No. Oh no, this is measuring it against the euro. My bad. So how many I guess it says the price of one Mexican dollar, MXN, or the Mexican peso to the euro. So if you have a hard time understanding some of these variables, you can always highlight over them, and it'll talk about what they are. So this one says what's the GTQ. I'm not exactly sure what that country is, but it has the flag. So I'm sure. Oh, it's Guatemala. So see, Bloomberg is very nice with that. Like you can highlight over certain terms, and it'll tell you about them. And you can basically see like what the colors represent in the matrix, the change on the day. So you can see the euro had a really good day. So you can see that the price of the euro appreciated against all these currencies. So it's basically saying, basically that the euro costs more in these currencies. So because Europe's economy must be, something must have happened that triggered that event that makes the euro worth more than all these other countries' currencies. So let's see. The last sector I have is, remember I said we have equities, fixed income, foreign exchange, and does anyone remember the last one? It is commodities. So commodities. Commodities are a unique item because the way they're traded aren't through conventional securities per se, but they're traded through things called futures and forwards and options. So basically, does anyone know what a future is? Let's start there. So basically, it's a contract that says, I want to buy, let's say, 1 ton of beef 1 year from now at exactly $100 a ton. So 1 year passes. Let's say beef is worth now $110 a ton. Yeah, $110 a ton. So basically, the price of beef went up, but the price of beef you're paying for is the price of the contract. So you're buying it for 100, and if you sold it, if you sold that beef immediately, there's something called arbitrage. You would basically be making free money. You would make that money in profit basically because you held that contract. A forward. No, a forward is a contract. So a forward is just a standard contract. It's between you and someone else. But we have something called the CBOE. Does anyone know what the CBOE is? The Chicago. Yeah, go ahead. Yeah, it's the Chicago Board of Exchanges. It's basically a place where all where future, forward, and option contracts are traded. So basically, a future is basically an electronic version of a forward. Forwards where they don't exist per se. They're contracts that are made between two individuals, but since everything is electronic now, they're basically digitized. They're traded on exchanges such as the CBOE. So let's actually look at one. So can anyone give me a commodity? What does everyone drive with? Okay, and what do we put in cars? We put gas in cars, and then yeah, gas comes from oil. So let's say we want to look at oil as a commodity. So the way to look at commodities through Bloomberg, like you have to actually know the tickers, and knowing the tickers is sometimes hard. So let's say I want to look for oil. Let me write oil. So we can see we have an equity. We're not looking for equities right now. We're looking for commodities. So the next one says generic first crude oil, WTI. Can anyone tell me what WTI is? Uh, what did you say? No, it's not. So let's click on the description of this. It'll basically tell you a little bit about what this security is. So it tells you, CL1 commodity represents all oil futures that are being traded. So the way the way these contracts are traded, they have a certain size. So each contract, so one contract for oil can buy 1,000 barrels of oil. So one contract is worth, according to Bloomberg, $56,000. If you can buy a contract for that, that's good for you. But the next problem with these contracts are, where would you keep 1,000 barrels of oil if you got it? So technically, when these contracts hit their maturity date, or what it's called is their expiration date, they basically it basically says, like, for the money you've paid, we're going to give you 1,000 barrels of oil. But technically, since these things are electronically traded, they basically close at a certain date. So actually, we have to actually pull up a certain time period. So let's go to a function called CT. It represents the futures contracts table. So if we look at the contracts table, we can see basically the price of oil 1 month from now, the oil price of oil 2 months, all the way to 2, 3, 4 years from now. Basically, you're allowed to buy these contracts as long as people are willing to sell them. But I mean, if someone's selling a contract for 2026, they're going to charge a higher premium because they don't know what the price of oil is going to be. It could, for all we know, by 2026, there could be some global oil shortage, and then price of oil shoots back up past 100 all the way 200. It could be at a much higher price. So people who trade these contracts are going to make sure they're properly compensated for the risk. So let's look at the current contracts right now that are going on. So we can see that right now the contracts are actually going downwards. Why do you think people? You look at the last prices. You see there, as you go down, as you go into the future, the prices of these contracts are lower. That's actually something interesting. When I was looking at this a year ago, it was the other way around. What does that mean? What do you think that means? Yes, but from an oil perspective. So what's going on? Like, what do people think is going to happen with oil? What? So one of the factors could be A, there's more supply, but B, it's basically speculating that the price of oil between now and whenever these contracts are going to settle, it means it's going to fall. So people are betting that by the time December 18 rolls around, that the price of oil might be, uh, you know, might not be at this exact price, but it means it's going to fall down to it's going to fall down. So, this is a good way to see what people think is going on with commodities. But if you've looked at the overall trend of commodities, what have you been seeing? What's been going on with commodities like gold, silver? Like, how have they been going up in price? Have they been going down in price, or they're sideways? Yeah. So I guess one of the interesting trends to look at, I guess, is as the dollar has been getting stronger, the price of commodities have been falling. So a lot of commodities are indirectly tied to the value of the dollar because these commodities are basically traded in a certain currency, such as the dollar. Like, I'm sure you've heard of something called the petrodollar. basically the US dollar is the predominant currency for trading oil. So basically, whatever happens to the US dollar has a very big impact on the price of oil. So understanding how all these different variables can affect these different securities, it's an important thing to learn. So like if you can see like so if the price of oil is expected to go down, what could that indirectly mean for the price of the dollar? It's going to become stronger. It's going to appreciate versus other currencies. So these are some interest, certain things that you can look at. It gives you an indication of where the commodities market is heading towards, and what's going on. So let's pull up another currency. What's everyone's favorite precious metal? Gold, of course. So for gold, I believe the function is, I think it's XAU. Yeah, it's XAU. Oh no, it's a currency. Yeah, so basically, if you look at this XAU function, it actually measures how the dollar is, basically how much an ounce of gold costs in terms of dollars. And if you go to the description function, it'll say that. So there are there are these different functions that actually measure, the difference between the price of commodities using certain currencies. So it's always interesting to look at these different things and how they trend towards each other. So let's say you want to look at a whole list of commodities. So we can go to the GLOCO function, GLCO. So basically, GLOCO basically talks about all the major sectors. So there are four major sectors in terms of commodities. You have your energies, you have your metals, you have your agriculture, and then I believe you have your livestock, which is not shown here, basically your meat. So those are the the four major commodity markets that Bloomberg tracks. So we can look at, if we look at metals, we can basically see how all these metals have been doing in terms of dollar terms. So we can see, in terms of dollars, have they been going up? But if you measure it against a different currency, it's something interesting to note. You can see that the price or wait, no, it's not. Sorry. Okay, so what you've seen is basically this area over here, the percentage change in terms of the commodity going up does not change across currencies. But if you look at basically how it's done versus the currency, you can basically measure how good a country's currency has been doing. So you can basically see that even though it's showing that year to date versus the Korean won, gold has gone down, or the Korean won has gone down in terms of gold. But if we look at the US dollar, the original currency, we can see it's actually up. So that's really interesting to see. Basically, how you can buy more of a commodity using a certain currency versus another, because like I said, each country has its own currency. So it's like you can buy, like, each country can only buy a certain amount of a commodity using a certain amount of their money, and basically those commodities are valued at the amount of the foreign exchange that's being traded. So basically 1 ounce of gold might cost, can cost whatever the difference between dollars and like Korean won is, and if Korean won has gone down versus the dollar, it's going to cost more Korean won to buy, a commodity and a different currency. So it's just, interesting things to look at. I guess we're running out of time. So let me go over to last quick functions. So if we go over to BMC, this represents Bloomberg Market Concepts. I don't know if anyone's heard of this, but basically it's a crash course on learning the 4 different market sectors that I covered today. It does it in an interactive video way. It's 8 hours. Each section is like 1 to 2 hours or something. I think equities is probably the longest, depending on because of all the material. And then it also talks about macroeconomics and basically how different macroeconomic variables like CPI, GDP, and all these other factors affect the overall all these financial markets, because the financial markets are really driven by how a country is doing versus expectations. And that's what it is at the end of the day. Expectations, like the way the market moves is based off expectations. One last function, or one last area I'm going to show you is BPS. uh, Also stands for Bloomberg Professional Services. uh, let's say you want to get a list of some of the functions I went over today. Like I talked a lot about equities, and then there's something called cheat sheets. So if we click on the cheat sheets, we can basically and we go to the equity portfolio manager cheat sheet, let's say. We can basically see a list of all different functions relating to equities or any other type of security, or even the economy. So, these are some tools you can definitely use, to help yourself navigate the terminal. Because at the end of the day, you can only go as far as how either how to go, or, if you're able to properly leverage the search or the search feature of the function bar. So, at the end of the day, it all comes down to what you want and what you want to do. You can spend so many hours, going through all these different areas. I only just covered the surface of it. Like you can do so much more on your own. And with that, I'll end it here. Thank you again, for staying the full 2 hours. I appreciate it. It was really great with everyone being interactive. Thank you again to Professor Marshall for hosting this. Hopefully, I'll do another one next semester. And with that, thank you. Does anyone have any last questions? Anything they might have wanted to see? Or so you log into your normal account, the normal account you use to get onto any computer, and then there's a Bloomberg app on the desktop. So this is Professor Marshall's personal computer. She has the Bloomberg service, but you'll basically see a green thing that has two screens. It'll be called Bloomberg, like this. So you just click on that, and then uh, it'll open up like the login page, like I showed. Now let me log out first. I can't log out. Yeah, it'd be much easier if I had the keyboard because there's a logout key. But basically, you basically create an account, using that feature on the front page, and then from there, you can log in, and then you'll come to this home page here. From there, you enter in any of the functions I talked about, or you can even search for any terms, any companies. So you can write like Citigroup financials, and then functions will come up regarding that, like. That's weird. It's really so you can search for like Citigroup income. I think something will probably come up. Yeah, that's weird. Okay, but usually you can search for these things using this search function. Yeah, I have no idea what this is, but it'll allow you to find different pages. I mean, it just depends on how far you go. Just you can always navigate using the main page. So if you enter in city, open up the city stock. It has all the different functions you can look at, all the different things I talked about. You see all these different functions I covered today. So there's just so much you can do. Like with the time I was allotted today, like I was only able to touch the service, but like there are just so many more functions. Like if you just click on this company overview, like you can see there's a dozen more functions like I haven't touched at all that you might find interesting, but for the purpose of what I went over today, that wasn't the case. But yeah, anything else? Oh, you see, someone knows their functions. So let's go to MA. Let's see, click on deal list, announce total value. Oh, yeah, there you go. Deal list, you look at the value, you can see the biggest one was BP acquired ExxonMobil per share. I have, I mean, I'm not 100% sure, but you can see this was withdrawn. Uh, I guess maybe if we looked at a stock that, was bought actually, like Aetna and CVS, I think is pending still. You can see basically like how much they're willing to pay per share, I think, somewhere. Uh, Transaction value, equity value. Yeah, you'd have to just do a research on your own. I'm not 100%. Like I know this function exists. I looked at it a bit, but yeah, I'm not 100% sure. But like I said, if you need help, you hit the F1 key, and then maybe here you can like it'll tell you, how you can break it down and how you can find certain information. Like I said, if you want to ask a question, you can click the F1 key twice, click the contact here, and then send a message. But there's like so much. Like I can only touch. Yeah. Uh, Anything else? Okay. Thank you.